Our next guest says that although gold miners made a significant low in January, he thinks another short-term 20% correction is overdue, and he says that it may be happening now. Joining us today is the editor for thedailygold.com, Jordan Roy-Byrne. Thanks so much for being on the show with us. Thanks for having me. So Jordan, many of the gold miners have seen their shares rise massively in 2016. The mining charts, they show it, a rally of 83% in the GDX since the end of 2015. Does that show that perhaps things could be getting overheated now?
Daniela, I think in the very short term, yes, but not in the long term, because if you look at how these bull markets and miners have started, especially from similar lows, and we're talking about the 2008 low and then the low at the end of 2000, and if you compare how this rally has started so far, it's similar to those, and especially the 2008 one. And we can see by plotting the trajectories of all these rallies that going out in the quarters and years ahead, the miners are likely to continue to rise. But in the very short term, if you look, the miners are, based on history, they're due for a 20% correction, and they've gone up for about 3 to 4 months. Very strong. They're well above even the short-term moving averages, like the 50-day moving average. So, and I believe the miners are down about 10, 11% here and now. So if they crack a little bit more, it's very likely that we could see that 20% correction now. And if it doesn't happen immediately, it'll probably happen in the summer. But other than that, I think people need to stay bullish on the miners.
Right. Well, it's obvious that you are bullish on the miners. So I want to kind of understand the reasons behind that. Is it because of the Fed's delayed tightening and continued negative rates? Is that one of the reasons?
Yeah, I mean, that is one of the reasons. I mean, last time I was on, we talked about negative real interest rates, and I know that many of your guests talk about that frequently. And the real interest rate picture was negative for gold until about the middle of 2015. And since then, we've seen real rates, like the real Fed funds rate, that's gone negative. So even if the Fed, even if they hike once or twice, or if they don't hike, I don't think it's a big deal for the gold stocks. I mean, Daniela, if you look at where the gold stocks were at the beginning of the year in January, specifically the Barron's Gold Mining Index, which goes back to 1938, that index was at the same level as it was 41 years ago. If you look at the rolling 5 and 10-year returns for the gold stocks in January, both of those were the worst ever. You probably have to go back 90 to 100 years. In addition to that, we had about a 4.5-year bear market that was the worst ever. So the bottom, I think, that we're looking at, Danielle, that just happened, very, very significant in terms of history. And so that just tells me that, over the months and quarters and years ahead, that the trend is going to be higher for the miners, just because they were not only oversold kind of in the short term or based on a year or two, but based on 5 years, based on 10 years. They were so extremely oversold that there's really only one way to go, and that's higher. So
Jordan, let me ask you, what do you suggest that someone does here? What does an investor do if they are looking to get into the gold miners? Are you going to wait? Do you suggest to wait for the 20% correction that you think will happen?
I would. Well, if I had positions, I would hold them if I was long. But based on the history that we're plotting, and based on the fact that miners, even in very good years, they tend to have a couple 20% corrections. So given the fact that it's been 4 months, we haven't had one, I do think if you're looking to get in right here and now, just wait for the market to correct. Like I said, I expect it could happen here this month. If not this month, probably in the summer. So I think if you're looking to get in, just be patient. There's going to be an opportunity or two in the next couple months.
And what about, those analyst downgrades that we've seen recently for some of the heavy hitters such as Barrick and Randgold last week? Why do you think we're seeing some of the more cautious views in regards to these companies, Jordan?
Well, I can't personally speak for these analysts, but what I would say is, as you noted at the top, Daniela, these stocks have had huge runs. So perhaps the analysts are thinking the near-term risk reward is a little overdone. Perhaps the analysts feel that the gold price is going to stay where it is and not rise. So those could be some of the reasons. And these stocks have had a huge run, so it's difficult to buy them here and now. Like I said, I would be more interested in them if we see more weakness in the short term.
Finally, Jordan, just to wrap, you're bullish on the stocks. Are you bullish gold?
I am bullish gold, Daniela. Here and now, I do think we have to be wary of a potential rally in the dollar, but I do think we've seen a major bottom, and it's very important to note that the miners have strongly outperformed gold. That's also the case in the silver patch, and I think these stocks are going to continue to lead the metals, so we should take our cues from the stocks. But that being said, I am bullish on gold, and I do think it will be higher 4 or 5 months from now and higher at the end of the year.
All right, Jordan, thanks so much for joining us.
Thanks for having me.
And thank you for watching. We're shifting gears and talking gold and silver with Kitco's Global Trading Director, Peter Hugg, up next.